Hello and welcome everyone. Today we're diving into a brand new explainer, and I've got to tell you, we're dissecting one of the absolute most fascinating corporate structures in the global market right now. We're looking at Adani Enterprises Limited, or AEL. Now, if you follow the infrastructure or energy sectors even a little bit, you know this name. But listen, rather than just looking at it as your standard everyday conglomerate, we really need to understand it for what it truly is. It's a massive, living, breathing factory of companies. It's basically the flagship incubator for the entire Adani Group. So my goal today is to show you exactly how this machine works, how it funds itself, and what the latest numbers are really telling us about its future. So let's get right into it. Okay, here's our quick roadmap for today's explainer. 1. Introduction to the company. 2. The incubator model. 3. Recent financial performance. 4. Market and ratings. And we'll wrap it up with 5. Future direction. All right, Section 1. Introduction to the company. Let's take a minute to really wrap our heads around the sheer, unbelievable scale of Adani Enterprises today. Just look at this staggering number, 4,08,939 crore rupees. That is the massive market capitalization of Adani Enterprises Limited right now. You know, having been incorporated way back in 1993, this company isn't just a participant in the Indian economy anymore. At this kind of eye-watering valuation, it's literally a foundational pillar of it. But here's the thing. A market cap that large doesn't just magically appear from a single product or service, right? It comes from a massive, highly tangible physical footprint. And this really puts that footprint into perspective. AEL is definitely not just some financial holding entity sitting quietly in an office building somewhere. It's a deeply integrated physical infrastructure network. Across their core platforms, they are actively touching the lives of 350 million users. Think about that. Whether it's through their ports, their energy grids, or the airports you fly out of, this company is actively moving people, goods, and power across the entire subcontinent every single day. Moving on to Section 2, the incubator model. So how exactly did they build this sprawling network? Well, that brings us right to the core engine of the entire operation. To really understand AEL, you have to completely grasp this concept. What is an incubator here? It's a company that builds and nurtures new businesses across diverse sectors until they are strong enough to function totally independently. AEL's primary job isn't just to run mature businesses forever. Nope. Its job is to give birth to brand new industries. Just think about giants like Adani Power, Adani Ports, Adani Green Energy, and Adani Wilmar. All of these massive publicly listed companies were initially incubated right here under AEL before they were spun out to function entirely on their own. It's quite literally a factory that builds other massive companies. Now, to make this model work, you need a very specific, careful balance. On one side, we have AEL's established businesses. These are primary industries. Think mining services, integrated resources management, which is their massive coal trading arm, and metals. These are the legacy businesses where they hold absolutely dominant market positions. They generate steady, reliable, heavy cash flow. Now look at the other side, the incubating businesses. This is the future. We're talking Adani New Industries, or ANI, which is their massive green energy ecosystem building out solar modules and wind turbines. It also includes their 8 airport concessions, huge networks of roads and highways, and their Adani Connects data centers. So the brilliant strategy here is that they take the reliable cash flow from the established businesses and they use it to aggressively fund these capital-intensive, high-growth, futuristic infrastructure plays. And you can literally see this contrast in the real world. You have the established traditional operations, these massive, bustling ports handling incredible non-stop cargo volumes, and right next to that you see the massive incubating bets, vast, sprawling solar panel manufacturing parks stretching all the way to the horizon. It's a powerful visual transition from the legacy industrial economy to the future green and digital economy, and it's all happening under one single corporate roof. Section 3. Recent financial performance. Let's be real. Building the future isn't cheap. Let's look at the actual numbers to see how this incubator model holds up. We've got some fresh data right here from the fourth quarter of fiscal year 2026. Now, if we look at the top line, it's incredibly strong. Total income came in at 33,187 crores. That's a huge 20.2% jump year over year from Q4 of FY25. Plus, they saw a 30.3% jump just from the previous quarter alone. But like we said, the incubator model requires seriously heavy spending. Total expenses for Q4 FY26 sat at 32,458 crores. Notice how that expense line surged by 23.5% year over year? It's actually growing faster than their revenue. This leaves them with very tight operating margins for the quarter, but honestly, that just reflects exactly how aggressively they're pouring their money right back into scaling their operations. But wait, when we zoom out to the annual consolidated view, the operational leverage becomes so much clearer. Annual EBITDA, which, if you remember, is basically their core operating profit, grew from 13,237 crores in FY24 to 16,722 crores in FY25. That is a fantastic 26% year-over-year jump. So despite those heavy quarterly expenses we just looked at, the overall combined portfolio of both established and incubating businesses is actually generating significantly more operating profit year-over-year. Okay, now I want to draw your attention to these two specific metrics. Return on equity is sitting at a negative 3.38%, and return on capital employed is at 5.80%. Now, if you're a traditional value investor, a negative ROE might immediately set off alarm bells. But hold on. In the context of a heavy infrastructure incubator, this tells a very specific story. Incubating massive physical infrastructure like building greenfield airports or gigantic solar module factories from scratch is incredibly capital-intensive upfront. You have to deploy massive amounts of equity and debt years before the project generates its full potential revenue. So that negative ROE, it just reflects this massive ongoing capital expenditure cycle. The wealth is literally being built into the ground right now, and it just takes time to flow back to the shareholders' equity line. Moving into Section 4, Market and Ratings. So, how do the markets and, more importantly, the massive institutions that actually lend this capital view these numbers? Let's look at the credit ratings. This is a recent update from ICRA in December 2025. Despite those tight quarterly margins and the negative ROE we just talked about, look at these ratings. Their non-convertible debentures and their term loans, which, by the way, were recently enhanced to 2,500 crores, both hold a fantastic ICRA AA- rating with a stable outlook. And their commercial paper? It holds the absolute highest short-term rating of A1+. What does all this mean for us? It tells us that institutional trust remains absolutely rock solid. The credit markets completely understand the incubator model. They see that steady cash flow from the established mining and trading businesses, and they heavily trust AEL's track record of successfully scaling these massive new ventures. And guess what? The retail and equity investors seem to completely agree. 79.33%. That's the dramatic recovery percentage the stock has seen from its 52-week low of $1,753. Riding this huge momentum, AEL reached a fresh 52-week high of $3,144 recently on July 1, 2026. So even with the heavy capital requirements, the broader market is absolutely pricing in the massive future growth of these incubating assets. Which perfectly leads us to our final section, Section 5, Future Direction. What exactly is the market pricing in for the years to come? Honestly, it comes down to the incredible scale of human and physical capital being deployed right now. Adani now commands a dedicated workforce of over 12,000 full-time employees and workers. This is a massive employment footprint solely dedicated to building the future, particularly through their Adani New Industries or AON ecosystem. They are aggressively pushing into green hydrogen, solar, and wind manufacturing, aligning heavily with global ESG and sustainable development trends. They aren't just incubating single companies anymore. They are literally incubating entirely new domestic supply chains for India's massive green transition. And that leaves us with a truly fascinating thought to close out on today. We already know AGL has successfully spun off absolute giants in power, ports, and consumer goods. So looking at their current slate, which of AGL's incubating businesses do you think will be India's next massive standalone growth engine? Will it be their green energy ecosystem, their rapidly expanding network of airports, or their high-tech data centers? The incubator is running at full speed, and the results over the next 5 years are going to be absolutely incredible to watch. Thank you so much for joining me for this explainer today, and as always, keep learning.